Hello traders, Cousin Vinny coming to you from theclosingprint.com on August the 11th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which move lower by the close on Friday. After a start that looked like we were going to head much lower, we bounced at Monday's lows. We had the London Stock Exchange higher after seeing the British pound US dollar continue its bearish slump, and we had the Bombay Stock Exchange finally bounce. Hang Seng and Nikkei were both lower as well. The leading tech stocks all took it on the chin last week. Microsoft did manage to close green, as did Tesla. Most of our indicators are neutral to bearish. NYMO and NAMO cycles are still bearish. The total put call is at 99. The CPC equity only is at 68. And the index put call is at 120. VIX was at 1940 at the highs on Friday and closed at 1797. VIX VXV reversed as well with the bullish percent at 45.95. US dollar is still bearish. It's below its 20-day, above the 50-day. Yen is bullish, having a negative effect on the Nikkei, as you can see. And we had the British pound US dollar, as we said previously, moving lower, which is having a positive effect on the London Stock Exchange and the FTSE, with higher lows over the last few days. Bonds continue to fade. We're watching TLT as well as the 10-year yield. 10 years producing higher highs and higher lows over the last 3 trading days. Gold is flagging at highs. Copper is at lows but improving, and West Texas Crude and Brent continually pushing against that 20 EMA overhead on the weekly time frame. Needs to get it back above that for a bullish signal for equities. We have the S&P sectors slightly improving, but still a lot of oranges and reds. And the heat map for international markets has improved somewhat. Turkey being a standout, showing relative strength. We'll look at some IBD 50 names and some MarketSmith Growth 250 stocks that are showing relative strength. Bukowski's showing 505 green with the CPI signal green since August the 8th. The previous week was 32.2%. That's bearish. Improved to 87.5% last week, remaining bullish to start the week with 1 bearish pattern, 7 bullish patterns, and 267 patterns waiting for a breakout. Bottom line, just like last week when we started, we want to begin with a bit of caution and seek out the trend as the week develops. The spiders started off the week on a gap down with 10-year yields hitting lows that we haven't seen in some time. Back in 2016, we hit a low of 137. We gapped down to 157 on the 10-year yield. As a result, we saw the spiders gap down as well, formed a bottom right around 281.50, 282, and set about moving higher Tuesday and Wednesday. We did test those lows once again, and then we gapped up on Thursday. Of course, we got tweets coming out about additional tariffs on Friday. That sent the markets lower, just below the 50-day moving average, but right along the 9 EMA, suggesting there is a possibility we could move higher after we hit resistance that we projected on Wednesday and Thursday at the 292 area. We did pull back. We took those options off that we were trading, the 290.50s, with a nice profit before the market closed on Thursday. RSI is still moving lower, so there's a possibility that we could pull back. We'd like to see ADX red drop down below ADX green and ADX green rise this week, though I do expect that we could see a little bit further downside. That's due to the fact that VIX typically spikes twice before returning back down to mean. So we almost got down to the mean on VIX. We'll talk about that in a minute. For the time being, we're cautious going into the week with the expected moves with 297.49 as your high and 285.75 as your low, with $5.87 plus or minus to start the week. Volume was pretty good on Tuesday, Wednesday, and Thursday, and of course Friday was slightly higher. SPY 60-minute did make a valiant effort to get above these volume by price bands overhead. We did get rejected and moved a bit lower. RSI is still producing lower highs at the present time, as well as tick cumulative with a lower low and a lower high. This is suggesting we could see further downside. If you are watching tick, look for it to move higher to start the week. That would mean price action would need to test this area once again at 294. I suspect we're probably going to move lower first before trying to get back up to the highs again in the short term. August being the seasonally weakest month of the year. The Nasdaq also had its issues. This is the weekly time frame, of course. RSI is still above 50. Volume has shown 2 distribution weeks in a row, with MACD producing a lower high. Some divergence there. If we do see a bounce this week, look for MACD to turn back up, with an expected move on the Qs of $4.67 in either direction, 191.16 overhead and 181.82 if we move lower. So that would be back inside of Tuesday, Wednesday's price action if that should occur. Watch RSI, needs to get above 50 and start trending if we have any chance of getting back above the 9 EMA and the 20, as well as the 50-day moving average, where price action closed on Friday. Money flow is pretty strong. We're watching that as well and need to see momentum turn back up as reflected in MACD. With respect to small caps, we've been looking for IWM to break out above this upper trend line. Instead, this triangle pattern broke to the downside. We saw weakness in small caps. That's a risk-off indicator. So if this continues to move lower, that would suggest that we want to take more caution. We have been selling into strength over the last 3 weeks on bounces, with that same scenario playing out last week. Now we need to see a bounce. Buyers did step up at the lows of the week, looking for a follow-through, with the expected move for the week on IWM, $3.45, 154.07 on the upside, 147.17 on the downside. Should we move lower, back into Monday and Tuesday's lows, should that occur, we might see a test of this price action we saw on Monday, Tuesday, Wednesday. Volume did taper off, which is a good sign. As we moved higher, it wasn't as bad as if this had increased substantially, taken out the previous 2 weeks price action and volume. RSI does need to get above 50, so we're cautious here as well. The Dow Jones Composite of 65 stocks in the industrials, transports, and utilities group was thought to have support in this area. We saw that that did not keep price action from testing the 200-day moving average last week. We did support there, so look for a follow-through or a retest once again. Volume did taper off towards the end of the week. That's a good sign. Stochastic and MACD are trying to turn, suggesting we might see a test of the short-term moving averages and these overhead highs if RSI gets above 50 and starts trending as a function of price. The S&P 500 equal weight index as well tested the 200 period moving average, moved away from that area last week. The number of stocks trading above their 50 period moving average is right about 50, so this could turn up or turn down, and we almost had a trigger and a follow-through had it been not for the Friday tweets, which kept the markets down. So look for a follow-through or a bounce and a move higher this week after waiting for the opening range before you take any trades, as we should start our week with a bit of caution. The S&P 1500, the Big Cap 500, Mid Cap 400, and Small Cap 600 did give us a little bit of concern on Monday and Tuesday. As this turned lower, it gave us a sell signal telling us to take more stocks off the table. It's now back above zero. We're looking for this breadth indicator, advanced decline percent of those 1,500 stocks, to give us a better idea versus the New York Stock Exchange advanced decline, which has over 700 issues that are non-stock related. that gives us a bit of a skewed signal. This is a better indicator and something that we use quite often. Back on a buy signal, short term, look for a follow through and a test of the overhead moving averages now, and for this histogram to go green to confirm a potential higher low and a follow through this week. Bonds continue to show us reason to be cautious as this red line continues to move above the 65 period moving average on the weekly time frame. The latter dropping, which is long-term bullish, short-term bearish with this red line rising through, same. In addition, we need to focus on the 10-year yield, which algorithms and the financial media have been focused on since the drop on Monday. The lows that we saw back in 2016, as we previously mentioned, were 137. We're looking for a potential test of that area. Hopefully, if you're bullish equities, you want to see this moving higher in the short term. The last two times that we saw these pivots, as we talked about previously, we saw a 44% gain in the markets thereafter. So that was 2012 and again in 2016 where we saw that reversal. Look for that to happen. Whether you are short-term or long-term bullish, you want to see the 10-year moving back up above the moving averages. Just like any chart that we trade against, we're spending more time below the moving averages than we are above, and until that happens, we need to see a bearish trend revert to a bullish trend only when price action moves back above the 21-day and continues to trend in a bullish direction. If you're starting off the week thinking options or trades against the indices or equities, you want to see the 10-year yield moving higher and take out this pivot high to start the week. As we watch for the weekly time frames on many of the bond positions like TLT, looking for TLT to move lower this week if you're bullish equities, and watch for high yield corporate debt and junk bonds, which are positively correlated to the markets, to bounce off the 20 period weekly time frame. We saw buyers step up last week. Look for this to follow through. If you're bullish equities, look for it to break down if you're bearish. If you're trading the FTSE or the London Stock Exchange, you want to keep an eye on the British pound US dollar pair. This continues to move lower. I wouldn't want to see this move much lower, but it is bullish for the markets over in England and the UK if this continues to show weakness. We could see a bounce back up to the moving average and get rejected like we saw back here in June and July. That would still be bullish, intermediate and longer term for the Nikkei, for the FTSE and the London Stock Exchange. That said, we are looking for a bounce in the short term. We'd look for the same, of course, in the Japanese yen, which has been on a tear lately as the dollar pulled back, bouncing off the 50-day with the 200-day just below. This looks like it's about to roll over. If that were the case and we get a bearish crossover for the dollar, look for the equity market to respond by moving higher. And if we reference commodities, of course, copper did make a new low. It's testing this double bottom that we saw at the start of the year. If this continues to move higher, that would give us a bullish signal for the economy. If it moves lower, that would be a bearish signal for the economy and for commodities in general. As commodities such as gold continue to press higher, we're flagging at the highs at this point. So if you're bullish, I'd be taking some profits into strength. A better entry or re-entry would be a nice little pullback to probably to the breakout level and the moving averages. You got this platform of support over here in the left histogram, volume by price, and we're overbought short term. Volume did increase, so that's a confirmation on the move higher on that bit of fear that we saw last week. And of course, there is crude oil, which is a positive correlation to the markets for quite some time. If you're bullish equities, you want to see crude oil begin a move above the 20-period moving average on this weekly time frame, retest some of these pivot highs. And if you're bearish, you want to see this roll over and drop. So keep an ear open for any discussion about weakness or strength in crude this week if you're trading equities. The heat map for the week, improving somewhat for most sectors from crimson to yellows, oranges, and lime greens. So look for this to continue to improve, with real estate and REITs looking better. Interest-sensitive stocks, traders will be going after those interest-related names. We saw strength in aerospace and defense. We talked about Northrop Grumman last week. That was up $30 or 30 points from where we first pointed it out on Monday. That did bounce and follow through. Also, the international markets are looking a little bit better, so keep an eye on these as well going into the week, with Argentina, Turkey, and others improving. We'll need to see follow through as well. A quick scan of stocks that showed performance last week. You can see that utilities, REITs, and healthcare have the biggest percentage of stocks that showed relative strength, with the fewest in communications, materials, and energy. The takeaway here is that we want to see improvement as breadth should start to expand again, and the number of stocks trading above the 50-period moving average should turn from the 50% level and head higher if you're bullish. If you're bearish, you want to see all of these stocks deteriorate this week and see some higher than normal down volume versus up volume. IYR real estate moved higher. Transports are at the 200 period. When you see this bounce, if you're bullish equities, lose it if we're bearish equities. XBI, want to see that hold the 200 period. MACD's turning up. Biotech materials holding just below the 20-day. Nice volume to start the week. We'd like to see follow through if you're bullish. Watch for MACD to follow through. Communications just below the 20-day. That's Netflix, Disney, Comcast, etc. Energy, the weakest at the lows. Financials and banks bounced off the 200 period moving average. Need to see that move higher if you're bullish, lower if you're bearish. Industrials, same idea, bouncing off the 200 period moving average. MACD starting to turn. Technology, after having a strong July, as we spoke about early in June, the seasonally strongest month of the year, we did see some selling and profit taking. MACD is turning now on the discount to a lot of these stocks. Look for semiconductors to perform if you're bullish, technology as well. Staples at the 20-period moving average, looking for that to move higher. Volume looked good last week. Utilities, we just talked about, strong as well. Interest-sensitive stocks like real estate and utilities faring the best. Healthcare tends to outperform as well in the month of August, so we'll look for that to move higher. MACD's turning. If you're bullish on the economy, you need to see a follow-through on consumer discretionary. Want to see MACD moving higher. And of course, with the ratio between consumer discretionary and consumer staples, offensive versus defensive, like back here in September, this rolled over precipitously. We don't see that yet. We do see this kind of look here that could morph into more serious downside. If that should occur, I would continue to take more risk off in your portfolios longer term, as this could continue lower over the next 3 weeks in the month of August. So this is a warning signal and something you should pay attention to. Here is the IBD 50 for the week. Once again, what we're looking for is price action having retested the 21 period or the 20-day moving average, whatever you prefer, finding buyers and following through on a bullish trend. The 20 and the 50 should be rising, as we see on Team at Lazian, and price action should have either tested or moved back above a bullish 21-day. RSI is above 50, another condition we'd like to see. In this case, rising, volume increasing, and ADX showing strength of trend is beginning to increase again as we are bullish with team. I would look for a little flag, perhaps a retest of the 9 EMA like we saw on Friday, showing relative strength. This one should continue higher in the short term. We're also looking at potential on Baozun. Though this is below the moving averages, we're looking for a bounce and a retest of the overhead 20-day. Not my favorite setup, obviously. I like to see things like Brown and Brown that bounced at the 20-day, follow through Tuesday, Wednesday, gap up on Thursday as potential trade for the week. CDW, computer hardware, software, and security, bouncing back above the 50-day moving average and the 21-day. RSI is above 50, following through. Volume increased substantially on Thursday. ADX is mediocre at best, so not my favorite setup, but it does look good. Comcast in that group of stocks that are in the communication sector. Volume is a little bit below average, so we'd like to see a move above the 20-day on Monday as a confirmation. I won't be trading it unless it gets above that area. And to start the week, we want to be a little cautious anyway. Look for RSI to continue higher. EDU, New Oriental Education and Technology, tutoring and educational services throughout China. A number of these stocks looked pretty strong last week, bouncing on Monday with a doji following through Tuesday, Wednesday, back above the 21-day and the 9 EMA. On Thursday, RSI is above 50. Look for this trend to continue in the short term. REITs have been strong, as previously discussed. Looking for this to push off the 20-day. It's a flat base, small cup or saucer pattern. Looking for this to break out eventually. RSI is above 50. Watching the volume and the strength of trend, which has been moving sideways, so no surprise that ADX is flat. Other names like Store Capital also showing strength. This one, I believe Robert Kaplan was trading in the live stream room. These look good, following through and breaking higher. Kind of reminds me of McDonald's. McDonald's had a good day last week. Wednesday, Thursday, Friday, followed through. We have common on this position. Volume was substantial, showing institutions are very interested in this name, as they were in Disney, which also saw volume last week. Not as good as McDonald's, but we're still watching for Disney to continue higher. So back to EPRT, a REIT, interest-sensitive stocks doing fairly well. Looking for this to follow through. I'd like to see an increase in volume if we're going to get long on this fairly inexpensive name in the REIT industry group. Fleet Core Technologies also blasting through the 21-day, hitting a peak on Thursday and Friday. Look for this to flag a little bit more. Maybe we get a better entry if you're interested in trading this one. Volume was pretty good on Wednesday and Thursday. Friday, relative strength versus the market pullback being a big plus to start the week. MTZ, Maztec, another very strong stock last week, obviously breaking out above this flat to slightly shallow cup pattern. After we broke out the previous week, we followed through into this week past. We do see RSI is a bit overbought now, so most likely this stock was going to continue higher. And when you see volume like this on a gap and go, it typically means that institutions are buying and we look for follow through. We have ADX showing strong trend, so watch the names in this industry group. PagSegura has earnings this week, I believe. PAGS, yeah, 8:15. So make sure you keep an eye on that. Sell it before earnings if you don't plan on owning shares. If it gaps down, we've seen a few of those this past week, so I don't like holding into earnings unless it's a very high quality name like Disney, for example. Looking for a follow through into earnings. Perhaps we can get a little earnings run. Otherwise, I'd just wait for post earnings to get back into PagSegura, PAGS. Paycom, yet another software name like Microsoft that moved back above the 21-day moving average, followed through. RSIs above 50. Volume came in, showed you institutions are interested in these names as they continue higher. Bullish, That's showing you on the dips here, higher lows, and the trend continues to be bullish, that institutions are supporting these names, stocks that we'd like to trade. In the case of Microsoft, I wouldn't mind taking some options again this week as we've been trading. We traded the 138s into Thursday. I sold those because I was going out of town. I'd like to see this follow through, maybe the 140s this week. Trade the 138s up to a target of 140. Then if we get past that, maybe 142.50, 143.79 on ATR plus 2. Check out the solar stocks. This particular one, SCDG, we like the way this looked going into earnings. Popped up, following through. Wednesday, Thursday, Friday. Whenever this happens, you see this kind of volume on a gap and go. That means it's institutions picking up shares. A retest of this low over here that gets bought would be a primo entry. I don't know that you're going to get that, but suffice to say we're above ATR 3 bands, so a pullback seems highly likely. At least a flag or a retest of the gap in the short term. Also watch stocks like First Solar. Not sure when they report, but keep an eye on these. Canadian Solar, and there's a few other names if you're interested in these solar names. StoneCo has earnings this week. Keep an eye on this one as well. It's trending. RSI is above 50. The only reason why I didn't add this one to the watch list is because RSI is pointing lower and it does have earnings in the short term. Stryker Corp, another name showing strength right where you'd want to see it and relative strength in the face of a little bit of weakness on Friday. Pushing above the 21-day. 21-day has a nice slope to it. ADX green above ADX red. You got ADX line at 37. Showing the trend is strong, so any pullback should get bought. Confirmation comes when bulls step up. That's when you know you can get into a stock and feel pretty confident that you're going to move higher. RSI above 50, a big plus. Synchrony Financial, Warren Buffett had this in his portfolio. I don't know if he still has it, but fairly shallow slope, but it is bullish. RSI is moving above 50. So most likely this follows through on this $35 stock. And maybe we could see the upper ATR bands at 36.73 and 37.52. We closed at 35.26. Looking like potential upside, a couple of bucks on this one. Tempur-Pedic, been seeing a lot of advertising on this particular name where we haven't seen in years. This one's really starting to advertise quite a bit, so I don't know if there's new management. Need to do a little bit more homework, but it is moving back above the 21-day and the 9 EMA. RSI is above 50. Volume's coming in. Looks pretty good. I don't know when earnings are. Make sure you check that out prior to initiating position here. If you're looking at Tempur-Pedic for a trade in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I am out of town with the family. I'll be back on Monday. So do keep an eye out on these names at the bottom of the list as well that I didn't talk about. Those showed up on the relative strength scan. Those usually have a higher potential for follow-through when you see relative strength line climbing above 98, 99 in their case. So check them out the same way we talked about the previous stocks in the IBD 50. A recent test or a bounce or a follow-through of the 21-day or 20-day moving averages are bullish, and we see RSI above 50. Also look for confirmation in volume. I'll send out a watch list later on Sunday night, 11:30 on the East Coast and 8:30 or so on the West Coast. Otherwise, have a great weekend, and we'll talk to you soon. Take care.